It is a pleasure to be here today with all of you from around the world and to discuss with you the interesting topic of the European SAF industry. My name is Anna Wendt. As said by Harry, I'm a consultant at Strategy and part of the PwC network, where we consult clients from all over the world in different industries on their path towards net zero, their sustainable aviation strategy, and especially on sustainable aviation fuels. Today with me, there is a fantastic panel of three experts. Amy, CEO of Arcadia eFuels, Stephen, Sustainability Manager at Airbus, and Danielle, Director Partnerships at LanzaJet. So, Amy, would you quickly introduce yourself to the audience?
Yes, thank you, Anna. Hi, everyone. I'm Amy Abair. I'm the CEO of Arcadia eFuels. And Arcadia eFuels is all about getting eSAF to market as rapidly as possible. And we are developing multiple production facilities across the world. So our first one in Denmark, another one in the UK, and the third one in the US.
Perfect. Stephen, do you want to continue?
Yeah, thank you. So good morning, good afternoon, everyone. So Stephen, I'm working within Airbus CEO, not CEO, but CSO office on SAF topic, and let's say contributing to the Airbus catalyst role we want to play on the different, I would say, key tips of the triangle we identify as the supply, demand, and the regulation to make SAF a reality for aviation sector. Thank you.
Thank you. Dan, do you want to close the loop?
Thanks very much, Anna, and a pleasure to be here with everyone today. Greetings from London. My name is Daniel Block, Director of Partnerships at LanzaJet. Similar to Arcadia, we're in the business of developing new technology for the sustainable aviation fuel industry. For us, we specialize in the alcohol-to-jet production pathway, which we consider to be sort of the next in line to progress from the developments we see in the HEFA pathway. And so we see this as going to be absolutely essential to the international ramp up for the sustainable aviation fuel challenges of the market. And so for us, we use ethanol as our intermediary. We've got our commercial demonstration facility in Freedom Pines, based in a little town called Sopperton in Georgia. We've recently announced the location of our second facility, which will be in the north of the United Kingdom in Teesside, as well as a range of other projects that we've got on public record, including a joint venture with Indian Oil in Panipat, India, Cosmo Oil in Japan, as well as Jet Zero in Australia. So progressions and developments right around the world progressing alcohol to jet. Thank you.
Perfect. Thank you very much for the introduction. So let's get started on the discussion. 2025 is a really interesting year for the European SAF industry as the Refuel EU aviation mandates start to kick in. This gradual change will also include not only the gradual change or increase of the SAF quotas itself, but also, of course, for the PTL quotas in the upcoming years. However, if we look on the current production landscape, we see that the capacities available are not sufficient yet to really fulfill future quotas. Despite many project announcements, we see that projects do not reach the final investment decisions at the end, or that they're canceled before. So the question is, what is actually the reason behind? Dan, you're saying LanzaJet is focusing on its alcohol-to-jet pathway and provided the technology to clients worldwide. What critical challenge do you see actually in the European SAF landscape currently?
Yeah, it's a great question. And I think first to take stock, so clearly coming into 2025, we've got that 2% mandate threshold, which is going to ramp up to 6% in 2030. I think the broad consensus is the HEFA pathway is going to be well suited and well placed to sort of cover that volume. But of course, it's that jump from 6% in 2030 up to 20% for 2035, where we're talking about a serious amount of SAF. And the question is, how are we going to be catalyzing the appropriate investments into first-of-a-kind facilities, including e-fuels, but including the likes of alcohol-to-jet, of Fischer-Tropsch, and some of these next-in-line pathways, which are requiring higher levels of capital requirements in order to get these brand new, in often cases, greenfield facilities up and running. Clearly, this is something that has the risk of stagnating progress if we can't unlock the appropriate first of a kind financing, as well as obviously then the appropriate feedstocks. Really, there's a big question as well around heifer in terms of, do we have sufficient feedstocks going forward, particularly in the event of a Chinese mandate taking place, knowing that a lot of Europe's heifer waste fats, oils and greases are going to be imported from that region. So in the event of a Chinese mandate and those resources being domestically reallocated, what happens then to the heifer capacity in Europe that we are also relying upon to help fulfill some of these volumes? So there's a couple of different challenges there, but I think particularly unlocking appropriate first of a kind finance is going to be essential to get these new facilities up and running.
Okay, understood. This financing issue is probably also especially relevant for PTL. Amy, do you have a specific perspective from a PTL path point of view?
Yeah, I mean, Dan outlined it pretty well. I would just say that, there's been, what we hear a lot from airlines is that, they've entered in some long-term agreements for HEFA SAF, for example, last year, and now the market's a little bit flooded with HEFA-based SAF in 2025, sometimes at a lower price than where these airlines have taken a risk and done a long-term contract. So that's really impacting the long-term contracts that, alcohol to jet and PTL need to have for financing and bankability. So I want to point out the differences between HEFA SAF and the other pathways. An existing refinery can do a pretty quick modification to their facility and produce HEFA-based SAF, right? So that is a totally different dynamic than what you see in other pathways. With PTL, also in alcohol to jet, but I'm speaking about PTL. I mean, it's a greenfield site. You have to start from scratch, right? It's a very capital intensive. So that means you have to have a significant amount of equity providers and debt providers to make the project work. The debt providers are going to demand that the project is de-risked. To have a project de-risked, you need to have long-term, solid offtake agreements. And so I think the challenge we're running into a couple of years ago was that, airlines were very confused, or buyers of eSAF were confused. Like, there's all these projects, people are talking about prices, all the way from fossil fuel parity to 10, 20 times fossil fuel. So they were confused. How do we sign a contract when you have this huge, price spread? Now I think there's kind of getting consensus with some published reports from ESA and others, Project Sky Power, where, hey, the price is probably something in the 5 to 10x range of fossil fuels. So now the airlines have a little comfort. Okay, their price is kind of in this smaller bucket, but they just got burned on signing these HEFA-based contracts. So now they're reluctant. Why would I sign a contract now? What if the market's flooded with eSAF or other types of SAF? So now we're at this blocking point again. So we really, really need to find a way as an industry through this and be able to have long-term offtake agreements for the bankability.
Okay, yeah, understood. Is there any existing mechanisms on, agreeing on the long-term bankability out there yet, or is it really still a black box? Is there anything which we already know what could help?
No, I think that, what would be helpful is something in EU specifically, like a contract for difference or some kind of revenue certainty mechanism. The UK has come out with that, and that's been very helpful to get projects off the ground in the UK. So I think that Europe needs to do something like that. I think it's way too much risk for airlines that have, a lot of other challenges to be able to enter into these, multi-billion euro fuel contracts, right? So we're really looking for some kind of government support to step in and fill this gap to make sure that the government mandates, are realized.
Mm-hmm. Okay, so it would not only need the regulation itself, where we would quickly talk about, but also some kind of support system for fulfilling the regulations itself. Correct. Okay, perfect. So when we now look on the regulations in detail, we see that Europe has a really specific regulatory framework when it comes to SAF. So Stephen, could you maybe explain to the audience what is the main difference in Europe compared to other regions, for example, to the US?
Yes, and maybe allow me first to state the fact that regulation or policies to be put in place to really settle and being able to support the SAF market emergence is key. So that's really something at European level, and but also in other region of the world or other country of the world that we are calling from all our earth, I would say, and not only Airbus, but I think also the entire SAF community and SAF value chain. So that's a really an important thing that to mention that everybody is supporting the fact that Europe set up this regulated approach. What is unique is the fact that it's really also gathering different countries, of course, by definitions, through the European ambition of decarbonization, so the Fit for 55 ambition at European level that is translating also this neutral emission ambition of Europe to aviation. So the unicity is that is coming to or through a mandate, and so it was unique a bit, I would say, a couple of months ago. We now have the UK following. We do have also other countries having set up or being in preparation of elaborating a mandated approach. So that's something that may comes also in other countries. But the interest is really this capacity to give a signal in terms of demand. I think it has been well received on the supply side because it gives this visibility over a long period, I would say. The unicity, I would say, also maybe is lying on the complexity. Today there is a lot of discussions at country levels, but also between the EU Commission or some administration that will be also managing the way the refuel EU will be operated, and this moving from a regulation from text, I would say, to a real life operation is, I think, also at the heart of many discussions. So that's also what make it maybe unique is this administrative complexity when it comes to be put in real day-to-day operations. So we know we have the way the question around the flexibility mechanisms, the definition of on the supply side on suppliers, what would be the legal definition of suppliers, would it be at national level, at regional level, where the mandate will have to be fulfilled, or also the different mechanism between either directive regulations and also the way to claim the SAF for airlines could be articulated. We know there are some, I would say, different angle or different layers in refuel EU compared to the red. Even if you refer to the red, you then have the ETS where you have some, again, definition of SAF that could be accounted for, the way to account, where airlines need to also prove the airport where they lift the SAF. Meanwhile, we are talking about a flexibility mechanism for the 10 first years in refuel EU. So that's also where today I think makes it unique, because it's also facing the reality when it comes to put in place something which is at the end quite complex. And to compare to the maybe if you were talking about US, where quite often people are comparing things. So in Europe it is a stick, and in the US you have the carrots, because there are more, I would say, showcase the different support and financial supporting mechanism at federal level or at states level. So, and I would like to bring a bit more nuance, because in the US you also, and we know with the change of administration, we also let's say consider the fact that there is some kind of instability or lack of certainty in some of the measure. The famous 45Z, which is expected by everybody, is still in the end of the new administration, because the previous one just launched the guidance for public consultation. So I would say today it's maybe a bit early, whether in Europe or in the US, to say such kind of regulation is successful. Everybody should do this or do that. Let's see also what UK will achieve. I think, on a very personal view, I think UK it's a quite well balanced approach. You know, you have this mandate approach. You also have this RMC revenue certainty mechanism, RCM, sorry. So let's see how it develops. What we can say also in the UK, the way the mandate is built. In the EU, we have some steps, you know, with big milestone. We have the 2% in 2025, 6% in 2030, and then a big jump on 2035. So maybe lacking a bit of linearity on this step. So it's not also helping to work around the capacity building, because you have to really deliver basically by midnight, you know, from such a level to another level. So let's see how it articulates. The positive thing is really to have this regulation. It's a regulation, so it's not to the countries to, I would say, put in place some specific way to answer it. You have to really introduce it as is in your law at country level. So that I think a positive aspects. We have seen some side measure also to support SAF, you know, for the airlines with the SAF allowances, because we're gonna see the free allowances decreasing for the airlines that being replaced by the SAF allowances. We still again questions, you know, airlines saying, okay, but it's today the number of SAF allowances is too limited in time and in volume. I think the Commission has heard all this requests and remarks and is working around it. So perfection is not yet in this world. So we need to worry as a collective, I would say, body, because either on supply, demand, or even OEMs or engine manufacturer, we need to bring all the relevant questions to the EU Commissions, to the different DGs, to make it more achievable, I would say, as target. But it's really positive to have that. Let's make it more efficient and able to deliver with maybe complementary measure. So Amy, you were mentioning also some mechanism around contract for difference. We are part of also a new alliance, I would say, at European level, which is just forgot the name, which is Amy, help me on that, on the e-fuel.
The project Skypower.
Yeah, Skypower Europe. Yeah, that's also proposing concrete measure to support the emergence of e-fuel. So we need to be smart and think into what could be added to the refuel EU to make it a success, I would say. Thank you, Amy, for that.
Okay, so understood. And you also said initially that the Refuel EU was really giving a signal to the supply to really ramp up the facilities. Maybe also, Dan, do you have any perspective on first signals from the industry on Refuel EU aviation beyond? Yeah, are there already some problems? How was it perceived this year?
Yeah, look, I think Stephen's captured it quite well there. So on the one hand, to start on the positive side, I think undoubtedly the industry is supportive of this mechanism because it understands it's going to be a necessary long-term signal for our market, both on the government side as well as on the finance side, to really get behind and understand that SAF is here and it's here to stay, and that this is an essential part of the industry transition. And that also comes with various industry aspirations to grow. And so already we're sort of seeing through various roadmaps the growth of absolute emissions in the airline sector. So this only further enhances the need for sustainable aviation fuel, particularly as we see the pushback of some of these technologies, and Stephen, of course, sort of representing even Airbus's views, for example, in the short term, needing to focus on sustainable aviation fuel, hydrogen more likely to come through, say, in the 2040s than first initially thought in sort of the mid 2030s. That being said, I think again, it often comes around this sort of compliance and the complexity that sits around the various programs of the European Union. And I think, there's a real hope that there will be a simplification of these processes. There's a level of empathy I have for some of these policymakers because they're trying to integrate sort of a new system and trying to embed it across a suite of existing systems. And sometimes that in of itself can be a barrier for new entrants and first of a kind players when you're sort of looking and sort of working out where you want to go for support. Do you follow what they're talking about for the new Net Zero Industry Act? Are you looking through Horizon EU, Invest EU? There's all of these different sort of buckets of funding, but it's not always clear what's still relevant and what isn't, and particularly as it relates currently to the ramp up with Refuel EU. I think the two big call outs that I'd have at this point in time, one, clearly I think there's the question around the EU ETS SAF allowances and whether that rope is going to be extended because they will fast be allocated. And any mechanism that is going to help bring down, be it the relative cost of production, the price that airlines are going to have to pay, will there be rebates involved on the government behalf that's going to ensure that the costs aren't fully needing to be borne by the industry and ultimately the passengers? So that's the one sort of big open question because we're seeing that those allowances will be quickly allocated. And then I think broadly around the flexibility mechanism and thinking around the production side, intuitively we are going to see that sort of concentration of SAF volumes going into sort of the big airports that are around the logistics hubs. So the question is sort of beyond that sort of 10-year threshold of the mechanism, what are we seeing to ensure that our secondary and tertiary airports are sort of not being forgotten and will also have the necessary sort of supply chains and logistics chains to ensure eventual sort of leading of SAF volume into these more regional ports or non-major ports. I think at the end of the day, we have to sort of be practical about this and understand that we need to start where we have our infrastructure set up. But we can't forget as well that setting up new SAF facilities, new supply chains where we're aggregating waste feedstocks or regenerating on degraded land and deploying this into regional ports have a whole suite of different environmental and social benefits for the communities that they're delivered in, which is going to foster new attraction of investment and policy support. So there's also the benefit of adding additional sort of industries in regional sort of settings across Europe, which can deploy net new sort of facility and volume into the sector. So this is something we have to bear in mind in the midterm, that we can't just concentrate in the big airports. So this is some of the feedback that we're getting at this point in time.
Okay, understood. Maybe one quick follow-up question on that, because of course there are multiple benefits to really have the SAF distributed among different airports. But what role do actually book and claim play in this? So of course there could also be one big airport and you can still account it somewhere else in the world. How is the status here? Do you have an answer for that?
Look, I think intuitively, again, you're going to have to see a European-wide book and claim system put in place. I think naturally this is the only way that we're going to foresee areas which are a further way off establishing their own local SAF supply. And I think it also then sort of enables these players to have more say in terms of which SAF they're procuring. And so this doesn't just come into their competitive thinking, but it even allows them to be a bit more selective in terms of their feedstock preferences and their production pathway perspectives. And it really sort of opens up the market for further growth. It's certainly going to help facilitate new projects to get up and away because they can access offtake through more means. So I definitely foresee a role for book and claim in a pan-European setting.
Yeah, thank you. So one question we also received in advance to the webinar is actually the whole topic of uncertainty, political uncertainty on changing regulations. So Amy, knowing that your company is based in North America, could you maybe give us some insights how actually the US governmental shift is impacting the European SAF industry, and how do you prepare for this regulatory uncertainty?
Yeah, okay, that's a tough question. I think that the Trump administration is pro-America business. And so I would hope that, some of these Inflation Reduction Act items would stay, especially the 45V, which is a $3 per kilogram hydrogen credit. I mean, that not only benefits, P to L production, but it also benefits existing refineries that want to capture the carbon and, produce blue hydrogen. So that's, it's a really important thing for the U.S. industry to continue to decarbonize. So, time will tell how things shake out, but I believe that, pro-America business should be there. Now, I know some of the policies, around sustainability are alarming to European legislators, but I would hope that the Europeans stand strong and keep sustainability as a priority and, do whatever the European Union can to continue to reduce CO2 emissions and kind of lead the way in that space. And I think the stance that Europe has taken has also spurred other governments around the world, in Asia, as well as, some talk in the Middle East about also putting measures in like this to continue to help the world with climate change.
I might also jump in, Anna, if I can.
Of course.
I think sustainable aviation fuel has a very real capacity to develop bipartisan messaging, and sort of to the points that Amy is already raised. We're still seeing the work progress in the United States, particularly along the lines that sustainable aviation fuel industries are going to be promoting regional revitalization projects. They're going to be securing long-term incomes of farmers, and really essentially the demographics that you would associate with Trump's base and the Republican states. And so really what this is about is securing energy independence, be it in the US or anywhere that you are seeking to build out your industries. You're looking at helping to create new long-term industries, economic windfall, and helping maintain communities in regional settings in particular who are facing a lot of brain drain. You're seeing urbanization as a big trend. So sustainable aviation fuel projects, given their long-term nature, are a way of underpinning sort of the future-proofed sort of potential of these regional hubs and centres. And, in the case of, say, Freedom Pines for us, we're based out of a little county in rural Georgia over in the US. And, this is a facility with an intended shelf life of 20 to 25 years. You become a part of the fabric of that community, and you're really sort of building strong ties, even at an interpersonal level with, the shopkeepers in town, with the local work that you are generating, be it directly or indirectly. So as a consequence, we're already seeing out of the US reasons to be positive that this is a bipartisan matter. We saw Calumet Basin in Montana receive a Department of Energy loan, which has come through subsequent to the election. We see the Farm to Fly Act, which very much promotes this local grassroots approach in rural America and promoting the utilization of agricultural resources into alternative fuel production. So again, I really sort of am taking on the challenge and really believe in this idea that that bipartisan messaging is something that we can do effectively as a sector.
Okay, yeah, thank you for the insights. So one topic which is also really interesting, what we a little bit discussed in the beginning, was the whole topic of shift away from HEFA. So we have already many contracts for the HEFA pathway, but we see that alcohol-to-jet PTL are increasingly or aimed to be increasingly produced. What is actually the reasoning behind this shift? Stephen, do you have a perspective on that?
Yeah. Yeah. I can share some views on that. And Daniel, indeed, in the introduction, mentioned this around EFA. I would say both. To me, when we look at EFA, we need to look both at the company profiles we rely on EFA assets and the ones that are more starting to develop the new technology, so ATJ, Fischer-Tropsch, e-fuel, and so on. So I would say we can find more majors on the EFA side today because they rely on already existing assets and whether producing HVO already or something like that, or being able to convert or refurbish existing assets. So and they have the capacity in terms of investment to do this investment on their own. So that's why basically FI is today dominating the market. Even if we do some projection, maybe we can see up to 2030 at global levels, not only at EU level, but at global level, we may see around between 70 and 80% of SAF still being FA based. But as mentioned by Daniel, we will basically at one point face a limitation on the feedstock at global level, whether by natural limitation or, as also alluded by Daniel, whether a region that is today more exporting the feedstock decide to add value to this feedstock and transform the feedstock into SAF on their own. So not to name China, for example. So, and definitely that's the view of Airbus. If we look at 2050, we will need all the different technology of SAF to match the aviation ambition in terms of decarbonization. So it's not a question of choice between technology. We will need every technology. For sure, you will have to face regional specificity, either around the feedstock or even the technology capacity building. So it means that not everybody will produce by each and every existing technology. You may have some region more favorable for e-fuels, where basically the cost of the energy will be lower. You will be more. We're talking about the US. We know that there is a lot of power around the agriculture business and so on. So there will be some regionalization, but basically we'll need the different technologies. So I think, and to be honest and to be fair, I think we need to take everything we can take from FA, because at the end we will need volume, but we need also to be sure to prepare early enough the next generation, so ATJ and so on. So if we wait just too late, we know the lead time to set up from a greenfield a new production facility, so compared to a brownfield or an existing FA plant. So we need really to be prepared to jump into this new technology, to de-risk, and that's basically the path that LanzaJet has taken. And that's very, I think, to be honest, that's very courageous, because you need really to engage all your motivation and your resources in this new technology of production. So that's what we need to support, basically, even as Airbus, and we come back on that later on during our discussion. But we will need to complete and to complement the FR technologies. That's a no-brainer, and prepare the future of SAF through the new technology. So Fischer-Tropsch, ATJ, e-fuel, HTL, well, pyrolysis, why not? So that's and we are very involved also at STM level to ensure that all this new technology are going through the new pathway approval, in order that the market is able then basically to select what will be the most successful and the most I would say sustainable, not only on the sustainability aspect, but also on the economic side.
Okay, no, understood. Thank you. And I think so, especially e-fuels is on the innovative side of the technologies. And in theory, the feedstocks compared to the bio-based SAFs would be unlimited. Of course, I say in theory, because the real life is a little bit different regarding competition for the feedstocks. Maybe Amy, how do you see the situations for feedstock availability and PTL production within Europe specifically?
Yeah, well, I think that the main raw material are the two, really, renewable electricity and CO2. So if we take renewable electricity to start with, I think we see a lot of new build out of renewable electricity across Europe. So that's very encouraging. The way the regulations state, though, it's really advantageous if these PTL projects are located in an area where the grid is above 90% renewable. And right now there's only like 2 or 3, maybe 4 bidding zones that meet that criteria. So we hope and expect that more renewable electricity will be built out by 2030, and then more and more regions will be able to meet this 90% threshold. If not, it's almost impossible to have a cost-effective project because you'll have to subscribe to multiple more PPAs than you actually need. So you're buying more electricity than you can use, which then increases the price of the SAF, eSAF. So that doesn't really work. And then unfortunately, the places where the grid is above 90%, unfortunately, there's a lot of grid issues where the grids need to be built out more. You can't get a grid connection. So it's, it's one of these interesting challenges that, developers need to work through. But I am encouraged with the continual build out of both wind and solar projects in the EU. In terms of the CO2 feedstock, it's actually incredibly challenging because what's happened is, of course, the governments are all focused on CO2 emission reduction, which is fantastic. However, there's a lot of incentives now for CO2 capture and sequestration. So what that has done is become the governments are now competing with PTL projects that need to buy CO2 as a raw material. So the price, from a couple of years ago has now increased, almost doubled, because the governments are now pumping money into sequestration. So companies are like, well, I'd rather take government money and sequester it than sell it. Or if I do need to sell it, I need to make sure I make enough money. So companies like Arcadia are having to subsidize the government money that they would get for sequestration. So that is a total mess, actually. But I'm confident that will work itself out. I mean, an easy fix would be that the money that companies would get to sequestration of biogenic CO2 or direct air capture CO2, if that same credit could be applied to use in, e-fuels, then that problem is solved. So that's an easy way to do it. But again, that's not in place today. So yeah, so there's quite a few challenges on the feedstock if we want to, reach this 5% eSAF mandate in 2035. I mean, these things have to be cleared out of the way. I think for, the 10 or so projects at scale that need to happen by 2030, we'll find a way through that. But to have, 50 something projects by 2035, there has to be a fundamental change in these areas.
Okay, yeah, no, thank you. Yeah, I think the feedstock availability is really or prices is really one of the key challenges out there. I mean, when
just to add on quickly, I think that eSAF projects are basically driving so many of the industries in energy transition, right? You're driving renewable electricity build out, you're driving electrolyzer and green hydrogen production, and you're driving CO2 capture. So those are kind of all the fundamentals of the energy transition. So it's kind of all wrapped up in one. So if e-fuels, e-methanol, eSAF, if those projects can succeed, then you'll see huge increases in all of those aspects of the energy transition.
Yeah. Is there maybe any other comment on that from the round on the whole topic of feedstocks, prices?
Yeah, I might just jump in, Anna. I think the other area, obviously on the alcohol to jet side to be discussed is that of ethanol in Europe. I think the big challenge that we see is the inconsistency of the treatment of ethanol in application for aviation relative to road fuel. This is particularly around sort of the Renewable Energy Directive and sort of feedstocks that are considered compliant and non-compliant. And to be really clear, so it's absolute that the industry needs to be utilizing feedstocks on the biogenic side that are not conducive to land use change, additional net use of resources, not competing with food. This is clearly a fundamental baseline, but in the pursuit of very high standards, I think Europe does run the risk of foregoing the ability to utilize what are compliant feedstocks for its energy transition. So what we see, for example, in the case of ethanol, which is clearly something that can be utilized for sustainable aviation fuel production, is Europe has about 7 billion litres of existing ethanol production, of which well over 2/3, probably in excess of 70%, is utilized by road transport. But the vast majority of that ethanol wouldn't be applicable under Refuel EU on the basis that it comes from a crop feedstock. But that being said, this is coming from an existing ethanol industry. This is not new additional adduced land use change, but rather is coming from an existing industry where we know the inflection point of renewable diesel is going to reach its peak emissions. This is coming from the trend of electrification on the road transportation side, which we know full well. And on the EU level, we know that there's going to be a cap on combustion engine car sales by 2035. So we're going to see that inflection point of a reduction in renewable diesel demand come down, electrification go up, and all we're asking for is saying, well, let's not let this existing industry go to waste. Let's use it to help enable our energy transition. Now, categorically as well, in the meantime, we're also trying to be utilizing as many waste-based feedstocks as well to be creating our ethanol. But there is a progression and a chronology that takes place. And when you have something that you can utilize now in the short term that is compliant, which is not going to be falling risk, which we can demonstrate of inducing additional land use requirements, then it becomes a missed opportunity. And so it's always this case of let's not prevent ourselves from progress at the fear of getting something wrong. We've got to get the ball rolling. We've got to be filling up our next of a kind technology with viable feedstock when it's there at our disposal, and we will transition and continuously improve along the generations of first, second, and even into third generation feedstocks for ethanol, where we too at LanzaJet can partner with LanzaTech to create an e-fuel. We can also go through a gas fermentation process in order to take synthetic sources of carbon out of the atmosphere and convert this into an ethanol. So there's a series and a progression, and we just shouldn't prevent progress by setting our standards too unreasonably high in the short term when we don't have an industry in the first place.
Mm-hmm. Okay. No, yeah, understood. And I think to get the ball rolling, one thing which is really seen in the industry is that a lot of partnerships are getting formed to support each other, to get the industry running, and actually to just make SAF a reality. And here also Airbus is really active, Stephen, with forming partnerships, for example, with LanzaJet last year. So what is actually the strategy behind, and what problem are you tackling with it?
Yeah, and thanks Anna for the question. It's for us, it's really key to ensure that all the key stakeholders in the SAF value chain are connected and are working together to make it happen. And even when we talk about partnership, we are also working a lot with I would say traditional oil and gas or the middle market oil and gas, because for example we have partnership with Neste, with Total Energy, with OMV, and I think we're gonna still expand that, because we also need to be conscious on the fact that I was saying that we need to take the maximum of the FR, of the co-processing also, for example, which is I think could be an important brink for SAF in the beginning. So we need to ensure that all these players we already have some assets in place are really convinced that they need to engage more on the SAF topic, because jet fuel, even fossil jet fuel for these companies is still a very marginal profit for them, for the company. So when you ask them to do, even if it's measurable effort for them, when you ask them to shift from the fossil to renewable jet fuel to SAF and so on, they really need to be convinced that there is a market. So we are there really to take them by the hand and say, okay, yes, we can bring you to really work around you, how to be on the regulated demand, how to address, how to consolidate voluntary demand also from airline and so on. And really, again, it's a question of giving them the visibility, the long-term visibility and certainty around SAF production. So we have this important work with the traditional oil and gas, where it's not so much a question of investment and so on. There are deep pocket companies that can do them by their own, but it is an important pillar. And then, as I was mentioning, we need to prepare the next steps in terms of technology, and that's where we find LanzaJet, we find other company we invested in, where basically what we want to make that, whether on project or at top company level. For a project, for example, it's ensuring that the project is going to be able to go through what we call the valley of death. It's during the years preceding the FID, where it's really difficult to attract yet the big investors, the traditional investors. But you need, let's say, between 50 and 100 million of dollars to make all these pre-engineering studies and so on, and be sure that your project is viable. And there, if you don't have really the right people alongside you to make this happen, you're gonna fail. So we don't have the capacity, unfortunately, to support each and every project or company in the world, but we want really to be able to let's say trigger this kind of spark in different places, in different regions of the world, and so Lanza is really a good illustration. We did not invest in a specific project. We invest in the sub company really to ensure that they're also able to spread their technology on multiple projects. Have this kind of multiplication effect, hopefully that will help to increase the volume. But we also have other approaches. We have created with would say what we call Airbus Friends, an investment fund where we are able to combine both, I would say, investment in SAF production project, but also to secure offtakes. So it's a kind of dual support to the projects. And we do have airlines in this investment fund. We have Air France, we have Contrast, for example, and it allows them to secure also access to that through offtakes with, I would say, interesting conditions for them to get access to the product. So we need a combination of tools in terms of supporting the capacity building and matching what is important is matching the supply and the demand, and that's why we're also doing on the demand slide what we call sometimes some lighthouse project when we support some airlines. We have done it with EasyJet, with Wizz Air, and we will have other coming in also in the future months, where we support them to get access to SAF from some specific routes with different kind of support that we can bring either through our business travels, through our scope 3, so we can help also absorb airlines, absorb the premium price for airlines on the SAF topic. So I would say it's a combination of different elements. There's not only investing, it's also supporting the demand and combinations, scope 3. So that's a way we try to, let's say, at least give this momentum to some projects to ensure they go up to the FID, which is not an easy journey, I would say.
Sure, but it's great to have these lighthouse projects, as you say. Being aware that we have 10 minutes left in this webinar and also want to have a look at Q&A, could every one of you quickly share a quick win to get the European SAF industry ramped up, if you need to summarize in one sentence? Maybe Amy, do you want to start, especially looking on PTL?
Yes, I'll start. We need to see projects reaching FID, this year, and to do that, we need support from the government, probably for some kind of revenue certainty contract for difference. So we are anxiously anticipating the Industrial Green Deal, and let's see if that can get these projects over the finish line.
Perfect, thank you. Daniel, do you want to share your insight?
Yep, would fully endorse Amy's views, and I think beyond that, I'd come back to consistency of feedstock policy for sustainable aviation fuel. Let's not let good viable options. Let's not leave those on the table, and let's be really fair and consistent with how we treat them from one sector like road transport to aviation. I think the other one is would love to see the Net Zero Industry Act progress this year, and particularly within that allow individual member state countries to support via sort of country-based production incentives or tax credits. Obviously, with most favoured nation dynamics in the EU, this is something they can't do, but hopefully we can see this dropped, which has been something that was flagged as a potential within the Net Zero Industry Act.
Perfect. Stephen, anything to add besides the lighthouse?
Yeah, no, difficult to add anything on that very, very relevant comments and statements. And I would say also, I understand we are still a bit far from perfection, but I think it's also important, as I was saying a couple of minutes ago, that we need to ensure a smooth entry into service, I would say, of the mandate of the review and the way it works, because the easiest it will be to implement, and I think then we'll be more comfortable in saying, okay, what is not working well, and then we can modify something. But avoiding modifying something which is not yet well in place, I would say, will help to really lift off the initial months and years of the mandate.
Okay, Perfect. Thank you very much all for sharing your insights on the European SAF market. We've also received multiple questions in the chat, actually. One interesting question is about the differences of the EU versus the UK quota. So especially looking on 2030, 6% EU quota versus UK 10% quota. What is going to happen? Will the UK pay higher prices for offtakes given the higher urgency? So someone has the glass ball.
So in terms of the offtake, I think that there's still obviously a lot of uncertainty around the United Kingdom, and the reason for that is with all these policies that are in place in terms of the SAF mandate, the touted revenue certainty mechanism as well. We don't yet have a facility that's been constructed and built in the United Kingdom. So the first and sort of the first, second, and third sort of priority for the United Kingdom should be let's get these facilities up and running and built such that we have fuel to be produced domestically and sort of forgoing the risk of importing and relying on sort of overseas volumes. Now, in terms of the theory around will the UK pay higher for offtake? Well, the idea of the revenue certainty mechanism and the guaranteed strike price effectively means that there is going to be a set market price by the government. And essentially what it's going to work, or at least the theory of the system, is that if the market price is sold sort of above, then the gap is then reimbursed by the government back to the operator. And so as a consequence, it sort of fixes out more or less what your market price is going to be. So hopefully there won't be too many distortions, and there's going to be a whole host of other accelerator programs as well as touted by the government for sort of your feedstocks and your advanced technologies that are capturing and generating improved emission reduction factors. So hopefully what you'll see is there'll be sort of like a rationalization of prices around that sort of broader market price. To be clear, that hasn't been set yet. The UK government has announced that this program would be rolled out for quarter 4 2026. We need it as quick as possible, and of course, without access to understanding what this market price is going to be set as, it's really kind of hard to sort of embed that in the economic modelling around the projects that we're trying to get towards FID. But yeah, look, the hope would be that there wouldn't be too much of a discrepancy in terms of offtake pricing in the UK relative to the EU.
Okay. Thank you, Dan. There was also another question on prices, so basically on methanol to jet versus Fischer-Tropsch. How competitive is actually, are the both routes compared to each other?
Yeah, I can take that. So right now, the methanol to jet pathway is not commercialized yet. I think there was another question about the approval for the pathway. That pathway will be approved. I mean, we need all pathways to be in place. But I think in terms of just the cost itself, I mean, we still need to see, a pilot demonstration of methanol to jet, and then that needs to be scaled up into a commercial facility as well. So right now, what we're seeing, because we are, technology agnostic and would love to see methanol to jet pathways succeed, I think that it's going to take some time. The yields are still not high enough. So if you take the current yields today, then the cost is exactly the same as Fischer-Tropsch. There's no benefit. If the companies that are developing this methanol to jet pathway technology succeed in raising the yields, then it could be advantageous. But I think we're still probably about 5 to 10 years away from seeing something like that.
There was also one question, actually comparing eSAF and ATJ. So what will be the final direction in 2050 for Europe? I think that's an interesting question to ask in that panel. So yeah,
Arcadia, LanzaJet, and a whole suite of other producers right across the technology spectrum will have full commercial scale operating facilities. I think Stephen mentioned it best there. This is not about any one technology succeeding. I'd also include HEFA within that bracket. I think the beauty of what we're doing is that this is such a large market that will only continue to grow, that we're in a position where we can celebrate and encourage everyone's success. And so I don't think this is a question of ethanol versus e-fuels, quite the opposite, actually. I know I will be celebrating and singing Arcadia's name from the hilltops when I see them deliver their first production facility in in the EU, and sort of goes right with the same mentality for all the first of a kind operators. It's no mean feat, and everyone is trying to put their brains toward de-risking these new technologies. So yeah, there's going to be a basket of pathways that we're leveraging, and yeah, there will never be any one technology that's the silver bullet.
Agree.
I think that's also a really good ending statement for our panel. Of course, we're aware that there are many more questions in the chat. However, we cannot answer them all. But
Maybe if I
yeah.
may take
Mhm.
the two last minutes, Amy, there's a couple of questions around some technical questions for the both infrastructure at airport level, but also what the aircraft and engine are able to use as technology and so on. So just very quickly, so there are some standardization bodies internationally recognized that are approving the different pathway to produce SAF. And this standardization body, you have the participation of the producer, you have participation of the OEMs, engine manufacturers, that ensure that the specification of the synthetic fuel, if we call them for the synthetic part, when they are blended to the jet fuel, to the fossil base, up to 50% today, they match the JT1 or other, even Chinese, Russian specification. So it means it's fully transparent. That's why we call or we use the notion of drop-in solution. So it doesn't request any modification of the engine or from the aircraft, and it's also fully transparent for the infrastructure. What you need to have a bit more is maybe some blending facilities and so on. But that's a bit the beauty of SAF, is that on the technical aspects, it's a ready to use technology as far as you are approved through the STM or other standardization body. So that's a very quick answer on that.
Yeah, no, agree. That's really the big advantage of SAF, that you don't need the new infrastructure. All right. So yeah, as said, thank you all, also from my side, for the great answers, insights, and also for the good questions. I think it's a really interesting topic, and as said, we need every how to say liter of SAF we can get in the ecosystem to make the energy transition happen. And I would hand over to Harry now for the final words of the webinar.
Thank you very much, and thank you, Anna, for your moderation there as well. I think some really fantastic insights and a lot of optimism to look forward to, and in what is a definitive year for sustainable aviation fuel and aviation decarbonisation as a whole in Europe and across the globe. All that's left to be said is thank you so much to Daniel, Stephen, Amy, and thanks once again, Anna. We hope to see you in Amsterdam in May, and have a fantastic rest of your day. Thank you very much.